This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Hi, Sherry. Thanks for joining.
Hi, Hall. Nice to meet you.
Nice to meet you as well.
Yeah, where are you coming from?
We're in Austin, Texas. How about you?
Oh, amazing. I'm in Hawaii. In
Hawaii.
Honolulu.
Great. And what's your role there?
Yeah, I'm joining Julia to just help support her in the fundraising. So she'll be kind of, launching that soon. So just joining the team for that and supporting her in all of those efforts. So I've, have accelerator background, worked at Elemental Accelerator, also GreenBiz, organized, everything that's kind of related to startups and investors there, now supporting Julia and a couple other accelerator programs. So.
Well, how's the startup scene in Hawaii these days?
It's not as big as the Bay Area. I recently moved home. Hawaii's home for me, so I just moved back last year, and I was in the San Francisco Bay Area, so different, a lot smaller, but it is definitely growing.
Great.
There's a lot of programs kind of, supporting early stage entrepreneurs and looking at our university here, University of Hawaii, kind of growing their efforts as well. So yeah, hopefully it'll grow even more.
Shinoa Farnsworth does the Blue startups?
That's right. Yes. Yeah. She's a partner of Elementals too. So she's, definitely big in the scene here.
Yeah. I've supported some of their projects in the past. Seemed like they had some cool
Oh,
startups there for sure.
oh, good. How did you get connected with her?
I did a project where I needed to connect with about 20 different angel groups, and she was in Hawaii and was on the list. So I got a chance to talk to her,
Mhm.
and kind of raise the awareness that there was a nice group there that she was working with. And then seemed like she spent a lot of her time on the incubator Blue startups itself. I think they have a smallish group there. I don't know how big it is at this point, but this is 2 or 3 years ago, but I'm on her list now. So I keep up with what they're doing.
Well, it's good to hear that you're connected with her and you're kind of in the scene here too. So you have a little bit of a insight as well.
A little bit, yeah. Well, hi, Julia. Thanks for joining.
Thank you
Sounds like a small world collision already.
Yeah. Just catching up on people we know already and what's going on. How are you doing there, Julia? Are you in New Orleans?
I'm not right now. I normally am. I'm in Florida for the holidays. We just came in like at 4 a.m. last night. So I'm pushing through the last of the meetings. Just saw Dimitri Sherry. Oh Lord. Anyway, but yeah, no, I'm glad that you reached out. I think I was listening in on one of your SBIR meetings and like being punchy in the chat. So I appreciated you following up. And yeah, I'd love to know more about your fund and kind of how you work with companies.
Sure. And so you're not raising now, but you're going to be raising. Are you a for-profit or a nonprofit?
We're for profit.
Okay. I thought I saw a .org on one of the URLs and just wanted to make sure because
Yeah, it's an old URL we've had it when we couldn't get .com, and so we had to like force it from somebody's, knuckles, and we used .org in the meantime. But yeah, no, we're at .com. We're for profit.
Okay, great. So at Hard 10 Capital, we're a investor relations introductions program. We help you find more investors. People come to us because they're halfway through their raise and they run out of investors. We started in Austin back in 2006. I started 3 angel networks here, CTAN in Austin and Baylor and Waco, and Williamson County had a hyper-local angel group as well. Retired from my day job in 2009 and started doing what's called Texas Entrepreneurs Network, helping startups find investors for their deal. And we basically did it online and in person. And then we just kept growing our investor network and our company. We went national in 2017. We now have 20,000 investors on the list because we've been doing it since 2006. And we basically changed our name to 10 Capital and started working with angel VCs and family offices from around the country. And so they're mostly US, some Canadian based and some European based, but primarily we're US based. And what we do is we take your pitch deck, go out to our network and build a list of interested people. And then we invite them to come hear you pitch in our online events. We do 5 a month. Now moving and setting up a hybrid in-person event series for 2024. Once a month, we'll be in a city. We'll start in Austin, go to Dallas, go to LA, go to San Francisco, Seattle, Chicago, New York. We found that most of our list is in the major cities anyway, so that's where we start. And we just go around and we do a hybrid event where they can either Zoom in or they can meet you in person in that room. And we were basically going and running an investor relations. So once you have an introduction, you pick it up and carry it forward to close, and we can help with that in some ways. And then we go through angel groups. We have, 30, 40 in our network right now that we go out and go through the application process to go through and get in front of them. We help them find members, so they give precedence to our companies coming through because we're helping find members. And then VC funds, for those that are still actively funding these days, not many are, but many are going to get back into it, I think, in the spring. We help them find limited partners. We do a family office panel series in 5 different cities around the country, and those guys look at startups as well. We're a monthly retainer. It's $3,000 per month for a 3-month commitment. After that, it goes month to month. If we need to redo decks, we can. If we need help with the documentation, we help with deal structuring. If you haven't started the raise, it's something we should talk about, how you structure it before you go out to raise the funding. And then we help with putting data rooms together if you don't have one already. So that's how we work and what we do.
Okay. So it's a retainer fee, 3-month commitments, $3,000 a month. Okay. In your network, what kind of percentages does it break down to in terms of angel groups or angels versus family offices and things like that?
It's about a third each. A third are angels, a third are VC, a third are family office. Angel groups, if you look at it number-wise, only 3% of angels are in angel groups. So of those 30, there's each one represents, say, 75 to 100 because they're large groups in some cases. So the vast majority of angels are by themselves. They're not in a group as well, and they just make their own decision.
And then if you've been at this for a while, what are your percentages in terms of, successful raises for these founders who come to work with you?
On average, is about 70% raise funding through our program, 30% don't. The 30% that don't do so for one of 3 reasons. First and foremost, the valuation is out of market. They sometimes come to us from the crowdfunding Reg CF world, and they just think they're worth $50 million with $10,000 of revenue. And that works in the crowdfunding world, but it does not work in the angel world. They do look at valuations, and they do look for market rate valuations. We did have people raise money like that during the pandemic, and then post-pandemic, we had many, many down rounds to get back into market rate. Second reason is there's something wrong with the deal. We have lawsuits on the books. We have other things that make it difficult to engage investors. So we have to stop, go back and fix that, and then continue the raise. And third is people don't follow up. They just simply don't go all the way through to close an investor. Email is great for communication, but in following and closing investors, you have to move to phone calls. You have to, and in person, you have to get out and really go close, because people are just not going to write a check because it's a cool idea. And you do get $25,000 checks over Zoom. Fine, when it gets to $100,000 or more, you really need to go meet people and pick up the check. They want to know more about you, and most people want to know more about their investors coming in. Who are these guys and what are their expectations? So it just takes more to close than some people want to put into it. And in the startup world, it's easy to get distracted by building product and finding customers and hiring team and all the other stuff that's going on. So it's not unusual. 3 months goes by pretty quick. That's the other thing. You think you have all the time in the world until you get halfway through month 2 and then realize 6 weeks to close. That's going to be a challenge. So once you make an introduction, we're really expecting you to start calling the investor every week, give them an update, build a relationship. That's the thing most people miss about fundraising that I learned in starting angel groups, is that you have to build a relationship at some level. I had many people come in and pitch to my room full of investors. 90% would pitch, go away. We'd never hear from them again. No money. 10% though came back, gave us updates, reminders, built that relationship. On the 4th update, out came the checkbooks in most cases. So it doesn't take a lot to build a relationship, but there has to be an element there. We have put in an in-person dinner event series. We found that with Zoom, it's great to open these dialogues with investors, but it was hard to close. And partly because people had questions that they weren't quite getting answered, but they weren't writing it down and telling us. And so we would hold dinner events in Austin and now the Bay Area, New York, where we get 10, 12 investors into a room, spend 2-3 hours, go through every slide in the deck, answer every question. And then we get 25% close rates at the end of that. Not everybody wrote a check, but many did. And you can then pick up and move on to the next group, which is something I found many people coming to me with 300-400 investors on the list that they're still hanging around. We often offer a closing function. We're going to go out. We're going to close those guys. We're going to be in your area, and if you get them to come out, hear the pitch, and then make a decision, and then move on and start working our way through that list. And 25% is going to close. You just don't know which 25. You just have to go out and do it. So we do those as well.
And is there like a timing that makes sense for most people? I mean, there's like to jump on with you, like, is it like the beginning of the quarter? It's kind of what I would imagine.
Well, there's 3 cycles, January to May, May to August, September to October, or September to December. So those are kind of the 3 seasons of fundraising. So if you want to be on the beginning of it, it's fine. We've had people join last week, and with us, we have to take it. If you signed up today, we'd have an onboarding call tomorrow, and the goal is to get the intro mailer out in 1 week. And the goal with that intro mailer is to start building that list of interested investors. So some people signed up in December because they're using that December time to build that list. So starting January 2nd, we're now, going after the people that are expressing interest. So it really doesn't matter when you sign up. There's a process to go through, and we just go through it. Not much is going to happen, later this week and next, but January 2nd is going to pick back up. And some people just push it to January to join as well. We have a limit at 25 clients. We have 23 right now, so we have 2 slots open. And so I'm sure we're going to get it filled up, but we do have other people that are cycling out. So whenever you're ready, most likely we'll be ready as well.
And what's your process like? You onboard, you get a mailer out. Like, do you walk me through your whole 3-month kind of outline?
After this call, I'll send you an email that shows how to sign up. You put in the first payment. We'll set the onboarding call tomorrow and walk through the intro mailer that we have to put together as a summary of the deal, get the updated deck. I haven't seen your latest deck, but we usually use what people have. If we need to redesign it, we'll go and mail what we have, but then we'll work on the redesign because it really comes into play when we're pitching to investors. We want to make sure it's a good deck. And the idea was in 1 week, we want to get the mailer out the door, and then it takes about a week and a half to go through all the lists. And then at the end of that time, we will have a list of 200 to 1,000 investors on it. And you go through and you look to see if there's anybody on there already. You look to see if there's anybody you want to know on there. And we prioritize the follow-up on that. We have 2 internal investor relations people who get on the phone and call these people and talk to them. They can't call everybody, but they can call a good number of the interested people that are coming in, get feedback on the deal and what have you. We then have 5 online events a month. And so you'll get signed up to watch one, and then you'll get signed up to pitch at one. These are 15-minute pitches. We want the 9-10-minute version of the pitch because it's pitch and answer questions. We want to leave 5-6 minutes for answering the questions that are there. We pull all the investors in the audience, see who wants to learn more about it. Then we share all this with you on a campaign tracker. Here's a spreadsheet, and we just keep track of what we're doing and what investors came, how many came from the event, how many came from the mailer, et cetera. So we see where people are coming from. And after that, we start going through angel groups. We start filling out the applications. They use Dealum, Gust, and Spark. And we identify what might be the best 3 angel groups to go for. And we do 3 at a time. We go through the application and then put it in. We do need a fair amount of content from your side for those, but once you fill out one on each of those platforms, you can reuse a substantial amount of it for subsequent ones. But we have a person that will help do a lot of that work for you as well. And then we have syndicate funds, and we have some micro VCs that we go to, and it just depends upon where your deal is at as to who we're going to. Most often, we're going after angels and family offices because people are just at the seed plus Series A range. They really aren't at Series B or C. We have some, but not many of those. So that's our program, is just walking our way through the network, trying to get interest from those who are out there. We do look for updates from you, sales team, product, and fundraise. Are you generating revenue right now?
We are.
How much are you generating?
We're going to be closing 700, close to 800K this
Okay.
year, but we're deferring some of it due to contracts not starting on time. So I'm working through that right now.
Well, there's an interest in the $500 to $1 million range. A lot of investors are trying to get in before you hit $1 million because oftentimes the valuation skyrockets at $1 million. So people try to get in before the skyrocketing effect happens. So there is some fair interest in that as well. But that sounds like it's good traction also. So anyway, that's our program. We will, at some point in month 2, we'll reach out to everybody on the list and say, we're going to have an in-person event near you soon for your deal, and see who expresses interest. And then we figure out how to go about that. If there's 10 people in a city, it's worth a dinner. If it's 5 people, it's worth a lunch. If it's 3 people, you just go there and have a coffee here, a lunch there, whatever, to meet people. And like I say, I find that that can be an effective way to close. The majority of these interests are in Texas, Bay Area, Chicago, New York. We do
Yeah.
get people in other spots, but those are the concentrations we have now.
And, it's not just who's on the cap. I mean, for me, it's not just the amount of money that I'm bringing in. It's also who's on the cap table and who's attracting more going forward into other rounds, like kind of banner name funds that you've worked with, or, family offices that you feel like are kind of along those vibes.
Well, we see them all on there. We get Kleiner Perkins, we get Sequoia, get Benchmark, we get NEA, lots of NEA people on there. So that's the beauty of the spreadsheet. You get to go through and say, I want to know these people, and we can target those guys. You do have to have a deal that would get them interested if you want the marquee VC names, but they are on there and there are contacts that we can go pursue. We just have to have the story that would close. There's just tremendous amount of interest in the VCs that want, everybody wants a VC, but we just have to be able to win that business. But we can do some targeting work to go after them.
The other thing I would say is that we're, pretty specialized. We're an adaptation technology within the climate tech vertical. So do you have experience in that space? Do you have networks in that space? Clean tech, sustainability tech, climate tech?
So we say adaptation. What exactly are you talking about?
Adaptation. So our ability to manage our climate risks is a very specific niche within climate tech.
So we have had some climate tech deals come in. To be honest, they've been general EV tools, carbon sequestration, a number of different wind and alternative energy sources that come in. But I don't think we've had in that particular space as well.
Mm-hmm.
And we do have some VCs in the climate tech space that we go to that might be encompassing of that. But up front, we'd have to do some research to figure out who might be the right people. So we could target them, but be candid, I think maybe 3 to 5% of our business has been climate tech so far. I would have thought it'd been more by now with all the IRA money that went out, but it has not. In the last market, it's been, which I think is closing now, it was predominated by biotech and AI. If you were half it was biotech and the other half was AI. And
we are an AI company as well. And that is something that whereas a climate VC network is reasonable, I'd say, I think on my AI side is a little weak.
And that you can do multiple positioning. So if you have the ability to be AI, let's be AI. If you have the ability to be climate tech, let's be climate tech, because you can appeal to different investor groups with different positionings. I find in most cases the deck is the same, but how you contextualize it up front. You say we're an AI company, we say we're a climate tech company, will help land, the message will land stronger with them. We have done custom events with micro VCs in the climate tech space. And so there's a good group. Right now, a lot of the Houston funds turned into, energy transition funds, which are mostly climate tech funds. So there is a group of people that are doing that right now. We just have to have a compelling deal for them.
Yeah, thank you so much. Again, I thought you were more traditional VC. I actually hadn't done my diligence. Thank you for kind of walking me through your services. Definitely send me some follow-up emails with attachments and the like. I'm not in a position today to say yes to doing this. We are going to be raising in Q1, wanting to close, $3 million in this kind of first period of the year. Curious what you're saying when you say, things are going to look up in spring. Does spring count as January, or does spring count as March? Is that something that you kind of know a little bit more about in terms of timing?
Well, if you want to kick off in January with a fundraise round, that's a good time. You have a good window there to take it forward. It takes 6 months to close. How much are you trying to raise at this point?
3.
3 million. And how much of it do you have so far?
Oh, I mean, we're starting from zero. I have some folks who will follow, but I don't have a lead.
Okay.
And I do want it to be
So if you're raising $3 million, what we're going to tell you to do is let's break that down into 2, maybe 3 tranches. And the first tranche is going to be $750,000, and the next tranche is going to be $1 million. Next tranche will be $1.25 million. Maybe that's too much. Maybe just do 2 tranches, $750,000 and then $1.25. And the idea is what you're trying to do is put a low valuation on the first round to get people in the deal, kick it off, get momentum, and then raise the valuation on the next round. So you create some scarcity for it. There's only so much of that low cost funding up front. and people really want a good price, well, then they have to come in early. And that's the challenge. If we make the valuation the same all the way across, then everybody wants to be the last one in the deal. And we just can't all be the last one in the deal. So that's why you try to break it down and structure it so that people who you can get in to come in early get a better price, and you get a win when you close that first round. When you get 2/3 the way through the round, we declare, okay, we're closing in 6 weeks. Who wants to be in? And then you calculate all the interest and committed money, not just invested. And you say, there's only 200K left, but I've got 700 of interest committed, first come, first serve. If you don't make it in, no problem. You'll just go to the next round. You don't mind paying a higher valuation. So that usually incentivizes the interested people to come on in and be a part of the deal. So structuring is something we do a lot of to help incentivize people to move forward on it more quickly.
And do you like talk about, your raise in threes? Like, hey, right now we're doing the first tranche of three. Like, are you transparent? I mean, how do you kind of articulate that in the very beginning?
Well, you want to put the big number out there. We're raising $3 million in total, because some people will come and say, I'm raising 500K. And then the answer is, well, you're not raising enough to get to where you want to go. Well, no, I'm really raising $5 million. Okay. So you want to put the big number out there so people know you're raising enough, but you want to break it down into steps and stages so you can run deadline campaigns. You can put financial incentives with low valuations up front, but higher ones on the back end to get people to move forward with it. So this is always going to be a $3 million raise, but round one is going to be 500, and round two is going to be 1.5, and round three is going to be another million or whatever. Typically, if you're and each one has milestones that go with it. So it justifies raising the valuation on it. For the 500, we're going to do this. Next 1.5, we're going to do this. And you just keep raising it up until you complete the raise as well. For 3 million, maybe just 2 steps, something like that.
Interesting. Yeah, I hadn't actually thought about it doing it that way. Do you sit in on deal conversations? Like,
We're often brought in to be a part of the discussion with the investor. Investor wants to ask us questions, or you want to ask us questions. We're happy to be in there as well if you need help with us. Vast majority, though, once we make an introduction, you go and you talk to the investor, and then you come back and tell us what they said or what they're doing, and we figure out what the next step is from there. If they want more information or they need to do diligence or what have you. And then we have a process with angels for how you do diligence, which is basically you don't let them do diligence on their own. You do it with them, because most of them don't know what to do. I'm supposed to do diligence. What am I going to do here? So, well, let me walk you through, and let's just look at everything in the box and answer your questions. Okay, we've done our diligence, and move on. So we call it the due diligence walkthrough. But you'll see that a lot out there.
Sure. Do you have any questions? The due diligence walkthrough is interesting. Actually, I've never heard about doing diligence, or holding their hands. That's nice.
That's right. That's right. Let me show you where everything is in the box and what questions do you have. Because what you're trying to do is they all have 3 to 5 questions to answer, but they don't sit down and write them out to ask you. They just procrastinate. So in a due diligence walkthrough, you're surfacing those questions. What is on their mind? And once you answer it, you get to the end and say, well, what other questions do you have? Well, I guess you answered it all. Okay. Well, I guess we've done our diligence. Let me see the wiring instructions. Let me DocuSign the term sheet. You're always removing friction from this process. And once they sign the term sheet and wire you the money, it's a done deal. Now, these are mostly convertible notes that we're kicking off with. So round one is convertible. And at some point, we are looking for a lead investor. You just don't know if they're the first, the 5th, or the 25th investor through the door.
Right.
And
That's an important wrinkle. I can't raise on convertibles. I have 2. I'm trying to raise an equity round, price round. I can't take debt on top of my NSF SBIR grants.
Well, then you just go straight to a price round, and we just have to figure out how to get a price on it.
And what's your process for that?
Well, if you just set the price unilaterally, like, hey, I just think I'm worth $20 million, that's just not a compelling argument to an investor. But if you get the first 5 angels coming in and they say, just informally among them, it may not be one person, but 5 guys coming together say, yeah, we think this is all worth $5 million. We'll offer B for $5 million. You now have a price round. You can come up with a $5 million equity term sheet. They'll said they would do it. They go.
I don't think I have any other major questions, Julie.
But the idea is, if you need a lead investor to kick it off, but if you're truly an investor that can come in and do all the diligence work, that's a lot of work. And so most people just want to kick the can down the road and just use convertible notes. But the way you get around that is you go find 5 guys who want to do the raise, and they want to be in for $50K each. And they all collectively agree that it's going to be $7 million, whatever it is. You can then go get an attorney to put a document together that says it's worth $7 million. 5 guys put it in, and there you go. You have a price round to kick it off. But there's investors behind that, so to speak. It's not you're just doing it by yourself. So we have to get creative with some things like that. But anyway,
Okay.
any other questions for
Yeah.
me, guys?
I think that's it. I think just send us over what you can and we will be in touch.
Okay,
Yeah.
sounds good. Thanks so much. Have a good one. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.